Welcome everyone. Today we're going to explore the exciting world of trading strategies and how Python can help you build them. In this presentation, we'll cover key concepts and building blocks for creating successful trading strategies. We'll also showcase real-life case studies of traders who have used Python to their advantage. Python has become one of the most popular programming languages among traders and developers. Its versatility and ease of use make it an ideal choice for building trading strategies. Python's simplicity and readability enable traders to quickly prototype and test their ideas. The vast number of libraries available in Python also makes it easy to implement complex algorithms and data analysis techniques. In order to build a successful trading strategy, traders must first understand several key concepts. These include technical analysis, fundamental analysis, risk management, and position sizing. Technical analysis involves using charts and other tools to analyze past market data and identify patterns that can be used to make predictions about future price movements. Fundamental analysis, on the other hand, involves analyzing economic and financial data to determine the intrinsic value of an asset. Risk management is essential for any trading strategy, as it helps traders minimize losses and maximize profits. This involves setting stop-loss orders, diversifying investments, and managing leverage. Position sizing, meanwhile, involves determining how much capital to allocate to each trade based on factors such as risk tolerance and account size. In order to build a successful trading strategy, there are several key building blocks that must be in place. The first of these is data analysis. By carefully analyzing market data, traders can identify patterns and trends that can help inform their trading decisions. Another important building block is backtesting. This involves testing a trading strategy against historical data to see how it would have performed in real-world conditions. Backtesting can help traders refine their strategies and make more informed decisions going forward. In one case study, a trader used Python to build a trading strategy that used machine learning algorithms to analyze market data and make predictions about future price movements. The strategy was able to generate significant profits over a period of several months, outperforming other strategies that relied on more traditional technical analysis methods. Another case study involved a hedge fund that used Python to build a high-frequency trading system. The system was able to execute trades in fractions of a second, taking advantage of small price discrepancies in the market to generate profits. The fund was able to achieve returns that were significantly higher than the broader market, thanks in large part to the power and flexibility of Python. In conclusion, Python is an excellent programming language for building trading strategies due to its versatility, ease of use, and popularity among traders and developers. Throughout this presentation, we have discussed key concepts that traders need to understand in order to build successful trading strategies, as well as the building blocks of a trading strategy, including data analysis, backtesting, and optimization. We have also presented real-life case studies of successful trading strategies built using Python. By using Python for trading, you can take advantage of its powerful libraries and tools, as well as its active community of users who are constantly developing new resources and sharing knowledge. We encourage you to explore Python further and experiment with building your own trading strategies using this powerful language. Thanks for watching. Like and subscribe, and we will catch you on the next one.